payment, they can come to us. We'll help them navigate all of that. We do reverse mortgage counseling. We offer a lot of services. Probably not what you all need, hopefully, at this point. So tonight we're going to talk about credit. I should have asked Will. Make sure I'm doing this right. Oh, cool. All right. So where are you all going on your credit journey? First of all, you're already here. So you've taken the first step. Actually, you know what? I want to stop for a second and ask you, young people, are you guys in school? You're out of school?
Yes.
What brought you to the class this evening? What was your interest?
I mean, I finished my undergrad and I'm starting my PhD, so it's like kind of a job, but not really a job. And then I'm trying to buy my first home also. So I just think it'd be like good to get ahead.
Excellent, excellent. So as I mentioned a minute ago, we do offer we offer home buyer education for first-time home buyers. I would sincerely recommend that you take our class. Right now, we're only offering the class online. And there's a charge, I think it's $49 right now, but you can take it online. And there are so many benefits of taking that class. Number one, you will learn everything you need to know about being a homeowner before you even start looking for your dream home. Number two, once you complete the class, you'll receive a certificate that proves that you attended our class. There are certain mortgages available that if you have that certificate, you may qualify for a portion of your down payment to be subsidized through our HUD housing program with that certificate. So make a note of that. Attend the class, even way before you start looking for that first home, okay? Okay, so you guys are here. Choose your destination. Sounds to me like you already have some goals in mind. That's awesome. Tonight we're going to learn why credit matters and ways to improve it, and then charting your next steps. Okay, so credit is so important in our lives as Americans for many reasons. If you don't have good credit or you have no credit at all, you're gonna find it very difficult to rent an apartment. You're gonna have a tough time even qualifying for a credit card, a home loan, a car loan, whatever. So a lot of our clients who come to us, they're like, okay, we need to buy a vehicle, but I have no credit. I need a car to get back and forth to work. We have children. We got to get them to school, but we can't qualify because we have no credit. So people come to us for that type of information. How do we attain credit with no credit? So those are some of the things we're going to talk about. So owning or renting a home, if you have no credit or bad credit, you can forget about it. Same thing with leasing or buying a vehicle. Same thing with credit cards. You can't qualify for a credit card if you have no or bad credit. And having no credit and having bad credit is the same end result. You're not going to qualify. All right, what's your destination? What are your goals? You've already started navigating that. And why is it important to you? Those things are number one. So as I have already talked about a little bit, why does credit matter? What is a credit score? So a credit score is a ranking that our future loan managers are going to base what we can qualify for. So if you have marginal credit, you may qualify for a car loan or a home loan, but if you have marginal credit, you're going to pay a much higher interest rate than people who have a higher credit score. So you want to make sure before you start applying for credit, especially a home loan, you want to make sure that your credit score is way up there before you apply for a home loan. You may qualify if your credit score is marginal, but you're going to pay a much higher interest rate on whatever it is you're looking for, what type of loan you're looking for. Credit scores range between 300 and 850. There are three credit reporting bureaus. There's Equifax, Experian, and TransUnion. They're competitors, so they don't share the same information with each other. So when I do a credit report review with a client, I pull all of us counselors pull from Experian with the score. But what I do is I like to go the extra mile with my clients. I like to pull TransUnion and Equifax as well to compare the information. Because like I just said, they're competitors, they don't share information, and you might be surprised that there's information on one report that may not be on the other reports. So when I'm working with a client, I'll go to a different website and I'll pull their TransUnion and their Equifax credit report as well, so I can compare the information and give them a complete picture of what's going on. Does that make sense? And again, well, the credit scores range from 3 to 850 amongst all three credit bureaus. Again, if you have a bad credit score, you're going to pay more interest on a credit card, more interest on the car loan, more interest on a home loan, and you're going to pay for a higher education. Have either of you ever looked at your credit report? Do you know what your credit score is right now? You don't have to share what your credit score is.
I just got pulled, but I think it's like 670.
You don't need to share out loud what your score is. Where did you get your score from?
My credit card allows me to like check it.
Excellent, excellent. And the reason why I ask you that is because Credit Karma also offers the credit score if you set up an account with Credit Karma. Credit Karma is a great tool to monitor your activity. Number one, to make sure that no one has access to your information, and make sure there are no mistakes or misinformation on your credit report. But the credit score with Credit Karma is never accurate.
Yeah, I have a story about that one for sure. Yeah.
So I always advise my clients, if you're using Credit Karma, that's great to monitor, but don't rely on that. So if you're planning on applying for a credit card or car loan, home loan, whatever, and you think your credit score is at one level and you go apply and you get denied, don't be surprised because the score's not accurate. The credit scores that the credit card companies offer are more in line with what FICO and your future lenders are going to look at. All right. Some of these slides are kind of goofy. I'm not. Okay. So credit scores, again, range between 300 and 850. In over 21 years, I can tell you I have seen 2 credit scores in the 800 range. Very, very few, obviously, very few people have a score that's that high. Typically, the good scores range between 7 and 750. Anything above 750 is stellar. And I don't recommend anybody applying for, especially a home loan, unless your score is at least 700.
Yeah, I read mine wrong. I'm okay.
Good.
I just
Good.
had to check.
Good. Well, and the reason why I'm saying that is because I do know that mortgage lenders will qualify you for a mortgage if your score is 640 and above at this point right now. But if your score is at 640, again, your interest rate is going to be at a rate that is not a good rate. Okay. Talked about credit report reviews with CCOA. I definitely encourage you to call and schedule a one-on-one appointment with me if that's something that you're interested in. I can help you look at your budget, because really doing the budget is the very first step of learning how much you can afford for a mortgage and what to plan for your financial future. Okay, so here's a little story. Miss Garcia and Mr. Jones both want to buy the same car. They both apply and receive a 3-year loan for $10,000. Mr. Jones has paid almost $3,000 more than Miss Garcia. What do you think happened?
His credit score was lower.
Absolutely. Mr. Jones' score was 420, qualified him for a 20% interest rate. 20%, if you pay 20% for a car loan, which actually I have clients who have been paying that much, 18 to 20 to 25% for a car loan. He paid $13,378 for the same vehicle that Miss Garcia paid. Her score was 720. She only paid $10,548 for the same car that Mr. Jones bought. Okay, so again, interest rates are going to be much higher. The time to pay off the debt is going to be much longer. And it's all due to that person's credit score. So those are the things that you need to keep in mind going forward with your financial future as to what's important, and you want to make sure that you can get it to the highest rate before you start applying for the credit. And I want to take a minute. I get off track a little bit sometimes, but I want to make sure that you all know that, oops, I shouldn't have said that because now I'm off track. We'll go back to the slide. So these are the 5 main things that go into making up our credit score. 35% of our credit score is based on our payment history. So obviously it's very important that we don't make any late payments or miss any payments on a whatever kind of credit, whether it's a credit card or a car payment or a home loan. If you miss a payment, that's 35% of the score. If you're late on a payment, your credit score can drop significantly with just one late payment, and that affects the credit score for quite a long time. Credit utilization. What that means is so let's say you have a credit card and your balance is more than 30% of the limit. That's what affects your credit score. So it's very important, especially when you're starting out new and you're trying to establish a good credit score, you need to keep your balances 30% or less than the balance. So the balance to limit ratio, that's what that means. You've got to keep your balances way below or below 30% of the limit. Credit history. So how long have you had a credit score? How old were you when you started applying for credit? That's 15% of your history. So the younger you are, the more that's going to affect you. The older you are, that's what's going to affect you. So I've had credit, I'm 62 years old. I've had credit for whatever, 40 years. 40 years. So I have a long credit history. You all are young. not so much. But that's 15% of the score. 10% of new credit and 10% of credit mix. So new credit is obviously, you know, if you already have credit card debt and then you go apply for a car loan, you have new credit. So that's 10% of the credit score. Credit mix, your future creditors want to see a mix of credit. So if you only have credit card debt and you don't have a car loan or something other than credit card debt, that's not a good thing. Credit card debt is revolving. What that means is that when your balance changes, your monthly payment changes. So that's what that means by revolving credit. An installment loan is a car payment or a home loan where the monthly payment is the same every month. You can't, if your car payment is $250, it's going to be the same every single month. So that's an installment loan. So creditors like to see a mix of credit on your credit report. I guess I should have put all that up there before I started talking, but that's exactly what I just said. So tracks whether you've opened up new lines of credit. 15% is the length of time accounts have been open and since the account's most recent action. And that brings me to a point where, excuse me, if you open a credit card to start establishing credit, but you don't use it, you're not establishing a credit history. You have to use that. A lot of times clients will come in and they'll say, but I don't want a credit card. And I'm like, well, having a credit card is actually one of the easiest ways to start establishing a credit record. There are different ways of doing that. Either you apply on your own. I always recommend to my clients, if they've never applied for credit and they're wanting to establish credit, I tell them, work directly with your bank. Go sit down with somebody at your bank and say, look, I've met with a counselor at CCOA, and I was referred to you, got to the bank. What are my options with you, Mrs. Banker, to establish credit? Most banks offer different options, and typically the best option is to apply for a secured credit card. So a secured credit card, the difference between secured and unsecured is that with a secured credit card, you have to put money in the bank. So if the bank says, okay, we'll start you out with a $300 limit on a credit card that allows you to use it to start establishing your credit, but you have to put $300 in an account that you can't take out. That's why it's called secured. So that's a great way. Different banks have different options, but that's always my first recommendation to my clients who come in and say, Miss Mary, how do I start establishing credit? Go talk to your bank. Who do you bank with? I ask them out directly. Who do you bank with? I generally know all the banks, local banks in our area, the options that they offer. And that's what I recommend. Again, make sure that the percent of the balance that you have is below 30% or below the balance. And are you paying consistently on time? Excuse me. Are you falling behind on payments? That kind of thing. So obviously you want to make sure you make your payments on time. We'll get to that part in a minute. Yes, and don't expect it to happen overnight. I want to give you both a shout out to say that when I was your age, and I'm thinking you guys are maybe in your early 20s, when I was in college on campus, they actually allowed credit card companies to set up tables to lure us to apply for a credit card. And I don't know about you guys, but we didn't talk about money in my family growing up. So in my mind, in my late teens, early 20s, a credit card was like free money. And they offered a free beach towel or some wind chimes or whatever to come and sign up for a credit card. Well, I was naive, and in my mind, I'm thinking, well, I'm going to graduate from college in 4 years, and I'm going to make $100,000 when I graduate. If I have $500 balance on my credit card, I can pay it off. Or $2,000 on a credit card, I can pay it off in one payment. 5 years later, when I graduated, making significantly less than $100,000 a year, it took me much longer than I had anticipated to pay that $2,000 balance off of my credit card. And I can guarantee you, when I was using that credit card, I was not buying things that I really needed. I was probably going to movies with friends, probably going out to dinner with friends, probably buying clothes I really didn't need. So those are the things that you need to keep in mind as you go forward. Okay. Taking out debt isn't always the best strategy. There are certain philosophies in the finance world that says having debt or having credit is a bad thing. And that's fine for some people. But if you don't have credit, as I mentioned a minute ago, there are certain things that make it much more difficult if you don't have credit. If you move into your first apartment, both of you may already know this, you move into your first apartment, the lights and the water and the gas doesn't automatically come on. You have to go to the utility departments, fill out an application. They're going to look at your credit score. If you don't have any credit at all, or you have bad credit, you're going to pay a down payment or a deposit before your utilities are turned on. So having credit is very important in our world. Okay, so we sort of talked about this. Okay, no, we haven't. Minimum payment. So if a client is going on our debt management program, I always, on their recommendations and their action plan on a budget, when they're going on our program, I always encourage my clients to pay more than the minimum when they can. So if they get a tax refund, or they get a bonus of some sort, or they get a raise in their paycheck, I always encourage my clients to pay more than the minimum. They don't have to, but if you pay more than the minimum, you're going to be debt-free in less than that 5-year period. So this is that example. One of them paid more than the minimum. Yeah, Miss Clark paid more than the minimum. Look at how, do either of you have credit cards yet? Okay. And I'm sure you've noticed, but on the very front page of your credit card statement, it'll tell you if you only make the minimum payment and you never use that card again, it will tell you how long it will take to pay that balance off if you only make the minimum payment. But they also tell you if you pay this much, this is how long it'll take. There are 3 lines on that particular space that'll tell you minimum payment, this is how long. This much, this is how long. This much, this is how long. So that's why I always encourage our clients, even if they go on our program, if you pay more than the minimum, right now your payout forecast is 5 years. If you pay more than the minimum, let me update your payout forecast and I'll show you how much sooner you can pay that credit card debt off. So it's definitely something, again, to keep in mind going forward. Pay more than the minimum when you can. Okay, group. Let's take a break. I need to drink some water. What questions do you have so far?
Well, I currently own a business, and we are working towards like getting more profit. We make clothes, so our whole thing is you know, trying to get our credit up to where we can, you know, buy more things, more supplies, so we can, you know, make it a little bit more efficient, right? So my question is more on the business credit side of things, of like, would it be efficient to like open multiple lines of credit that we know we can pay back, like based on like our return? Or would it make sense to kind of stick with one card and then just try to keep raising the limit every 6 months?
Either one would be fine. If you can increase the limit on the card that you're using, that's fine. As far as opening a lot of different credit cards, I hesitate a bit about that. I don't recommend having multiple credit cards open, because what happens is, and I touched on this a little bit, is if you've got a credit card, a lot of times it's tempting to buy things that you don't really need with a credit card. So as long as you have a business plan and you know what your goals are and you can stick to that, either increasing your limit is great, or opening a new line of credit is also a good thing.
Okay.
What kind of clothing store do you?
Oh, it's mostly streetwear. My apartment right now is just like the whole living room is just supplies. So, yeah, we're making everything in-house. It's a lot of like just t-shirts and just like more graphic t-shirts and things like that. And we're moving into where we can do embroidery and getting into new lanes. We opened up last year in July. So yeah, we're like getting close to our first year in return. You know.
You need to make an appointment with me. And I'm going to give you some resources that are totally off topic this evening. But there are other nonprofits that you may be interested in
Okay.
for your business.
No, I appreciate it. That'd be really helpful.
What's the name of it? Go ahead and give it a
Forge.
shout.
Oh, it's Day Trip Collective.
Oh, thank you. Thank you. I'm sorry, I thought you told me. Say it again.
Day Trip Collective.
Day Trip Collective.
Yeah.
Cool.
Yeah, that was when you were asking like the like why we were here today. I know she like, you know, she's about to buy a house and everything, and she wanted to get that side of things. But me and my business partner have been having discussions about like kind of how we would increase like our
Grow your business.
Yeah, pretty much grow our business. And I wanted to make sure like, you know, I talked to a professional about it and like kind of went about it the right way, you know. So that was pretty much.
Absolutely. So even as a business owner, you have to make sure that your credit score is in line.
Yes.
Okay. I want to introduce you to another nonprofit that offers entrepreneurs like yourself a very, very, very low interest rate loan that is fantastic for people just like you. But make an appointment with me, and you and I can talk.
Okay.
I always get so excited when things like this come up in my classes, because I'm like, oh my goodness, I need to talk to you. I've got somebody to send you to. All right. Has anything surprised you so far?
No, not too many left turns.
Cool. What will you remember tomorrow?
I did have a question actually. Much simpler question. But how many accounts is it good to have, like, open? What's like a good number?
Are you talking about credit cards?
Yeah, or just in general, like things that like would impact
There's
your
no
credit
real
score.
magic number
Okay.
as to how many accounts you have open.
Okay.
The thing that I definitely talk about in classes that I teach is if you apply for a retail credit card, be careful. You guys know the difference between a retail credit card and a major credit card, I'm sure. So if you've got a Walmart credit card, that's a retail credit card. If you've got a Sam's card, if you have a Gap card, if you have an Old Navy card, those are all retail credit cards. Retail credit cards are a little bit dangerous. Couple things. First of all, you can't use your Old Navy card to buy gas at Sam's. You can't use your dealer's card to buy groceries at Walmart. Okay? So be very selective in the retail credit cards that you apply for. I recommend to my clients or students that I'm teaching, if you're going to apply for a retail credit card, apply for one that you can buy things you really need. Gasoline, groceries, and clothing. And we all know who those companies are. Retail credit cards, and I've said this 5 times already, retail credit cards are dangerous because it's too easy to pull out that credit card to buy things that we don't really need. So keep the retail credit cards at a minimum. But back to your question, how many accounts is good? There's no real definite answer for that. But I would recommend keeping it very minimal, especially right now when your goal is to buy a home, you don't want to go out and open up a whole bunch of credit cards. I also want to mention, anytime you apply for credit, so if you go to Walmart and you apply for a credit card, every time you apply for credit, your score goes down. I don't know if you guys know that or not. Probably do. If you go to AT&T to buy a new cell phone, that representative behind the desk, when you fill out the application, that person is looking at your credit score. That's called an inquiry. Inquiries will reduce your credit score. So keep all of those at a minimum. Does that answer the question? Okay. As best as you can.
It surprised me that isn't necessarily in your talk, but that happened to me not too long ago, and I was floored. The longest credit card I ever had, and I was so proud of it because I got it when I was about your age, and I kept it up, and I was so good with it. But after getting married and kind of getting established and everything, it was a Discover card, and I hadn't used it for a while, and they canceled me.
Because
I couldn't believe
inactivity.
it. I said, what if I, get it now? Will I have my same credit? Because I've had it forever. Would I still get my original credit date? They said, nope, it'll start from the day you got it.
Yeah.
But, yeah.
Thank you for bringing that up. So inactivity, credit card companies will close your account. Anytime creditors close your account for whatever reason, your score goes down.
How long do you have to not use it for it to be considered inactivity?
Great question, and none of us can answer that for you. Have no idea. You guys, I'm going to tell you a little thing here. So when I became a counselor years ago, we attended a conference. My coworkers and I attended a conference, and it was presented by FICO. FICO is the main credit scoring agency that most creditors will take a look at our credit scores from FICO. And this person is standing up here like I am, and all of us had questions. What makes up our credit score? I felt so bad for that speaker because that person could not answer any of our questions. We don't know. Our credit score has been a mystery. To this day, it's still ambivalent. It's still a bit of a mystery. That's why it's important that we stay on top of what's going on with our credit history, because even the credit scoring agency couldn't answer our questions. And it's like, well, if you can't answer our questions, how are we going to give our clients the information that they're asking for? So it's definitely not as bad as it was 20 years ago, but it's still it's still a bit of a navigation. So you're asking questions that FICO people can't even answer, which is ridiculous because, as you all know, having a good credit score is vital to our success. And if we don't know what goes into our credit score and we don't know how to navigate that, it's like being in a canoe out on the ocean. It's like, well, somebody stabilize my canoe or put me on a bigger boat. This is crazy. All right. I hope I'm not getting too much off track. We've sort of talked a lot about this. Obviously, it's crucial that you pay your bills on time. I know that even in today's world, there are a lot of people who don't want to do automatic drafts. They're not comfortable with setting up automatic draft with any type of payment coming out of their bank account. So for those types of clients, what I tell them, if they're getting paper statements and they say, well, what should I do to make sure that my bill is paid on time? So what I tell those types of clients, as soon as you get your bill, that's when it's due. If you're going to mail in a check, mail it the day that you get it. Don't play the waiting game and say, okay, my bill's not due until the 20th. If I mail it on the 15th, it should get there on time. So, regulate those types of things based on your own desire. Again, if you don't care for automatic bank draft, I get that. But don't play the waiting game. Pay your bill the day that you get it. That's when it's due. Manage your accounts. All of our information is on our phone. Most of us. Track them. Set up accounts on your phone, on your laptop, on your computer, whatever, and monitor your accounts on a daily basis. My husband and I went to St. Louis this past weekend to watch Cardinals baseball game. And I use my debit card for everything. I never have cash. And we went to a restaurant, and I'd already used my debit card to pay for gas and groceries on the way up to St. Louis. Pulled out my debit card to pay for our dinner, and the young lady comes back and she said, "This has been tagged as a fraud alert." And I'm like, I've been using my card the last 2 days on the road. But if you go out of town, sometimes it's best to notify your bank that you're going to be gone. And I get that. And matter of fact, I appreciate that security purpose. But it's like, there's plenty of money in there. We worked it out. It was no big deal. But just make sure you manage your accounts. You guys are all smart enough to know all that. Stay under 30% of the credit limit. Start building credit. We've already talked about that. We've talked about all that. Single missed payment can drop your credit score by as much as 100 points. So, excuse me. What happens with credit? So let's say that you miss a payment today. The longer the time goes without you missing a payment or being late on a payment, the less effect it has on your credit score. So 6 months from now, that missed payment is going to have less of an impact on your credit score than it does today. A year from now, it's still going to show up on your credit report that you were late today, but a year from now, it's going to have a much less impact on the credit score. We've talked about most of this. Fewer inquiries. So this has always been a bit of a contention for me as far as inquiries. So let's say you're in the market to buy your home, and you're going to shop around for mortgage lenders. Keep in mind that every time you apply for credit, your score is going to go down. Now, if you're applying for a mortgage or a car loan, the credit reporting agencies can tell. So I'm going to make it a little bit easier. So let's say that you're applying for a car loan, and you go to Landers and you apply for a car loan, and it's not the terms that you really like. So the next day you go to, I don't know, Nelms or whatever other car place you go to. The credit card companies can tell that you're shopping around for a loan. So all of those inquiries, so let's say that you go to 6 different places and apply for a car loan, all of those inquiries will only be considered as one inquiry. So just FYI.
That has to be within 30 days.
That's correct. Girl, you've already done your homework. You didn't even need my class.
I've been applying for mortgages.
Oh, you have?
Yeah. Well, I have one now, but.
Okay. Yeah, you want to keep them in a short period of time to make it affect your credit score only once. Call me before you apply the next one. Okay. Let me work with you. Whoops. We've already done all that. The two of you already, I can tell you guys are savvy. I'm sure you already probably have a business plan and your goals are written out, all of that. Review and choose a step you can take now. My recommendation for both of you is call and make an appointment with Mary Sanchez so we can talk one-on-one about your individual goals, that kind of thing. So this is a little bit of a review. What's your strategy? Choose a step that you can take now. Pay your bills on time. Keep your balances under 30% of the limit. Manage your accounts. Download those apps so that you can manage your accounts. And I do want to say that I didn't mean to badmouth Credit Karma. In fact, I like Credit Karma as a credit reporting monitoring tool. If you don't have a Credit Karma account, doesn't cost anything, doesn't hurt your score. If you look at it every single day, 5 times a day, it doesn't hurt your score. Apply for it. Download it. Start building credit. Both of you already have, and I know you have too. I don't know why this keeps coming up. It's pretty much what we've already talked about. And these are steps, make more regular payments throughout the month, especially with home loans. If you make one extra mortgage payment per year, you will be astonished at how much that will help you in the term of your mortgage loan. There are apps out there that you can download. And so let's say that you have a mortgage for $100,000 and your mortgage is $500 a month. You can go on there and do, I call what ifs. And you can say, what if I pay $50 a month more than what my minimum monthly payment is? It will show you a new payout forecast. So I really like those what if applications. If I pay one mortgage payment more a year, what will that do to my overall mortgage payout? It's unbelievable how much just one extra mortgage payment will do for your overall mortgage amount. Oh, goodness. And I think we have talked about your goals. It's awesome. Oh, yeah, we have 7 minutes left. If you guys don't mind taking just a minute or two to fill out the evaluation. It helps us improve our services and gives us very valuable information.
That is such a huge thing to do, one extra house payment. Two friends of mine, that's what they would give each other for Christmas is half a house payment so they could do
That's a
one
good
extra.
That's a good Christmas.
That's a good Christmas.
That's so cool. And thank you for saying that. You know what? You're the first person that's ever said that in any of my classes. And that's awesome. Here's our contact information up here, guys. It's on my business card that I've given you. I definitely recommend both of you calling, make an appointment with me. Let me help you navigate your future goals because it makes me happy.